Welcome back, everybody. Sive is here with the forexpeacearmy.com. So let's have a look on the gold market. Well, actually, gold holds the punch really nice compared to the forex market because, as you know, the recent FOMC meeting minutes have brought some surprises because they have just excluded the phrase about soon rate cut from the statement and expressed the concern on stubborn inflation. So currently, based on the recent minutes report, so we talked about this in Telegram. So currently, based on the recent minutes report, the concern about inflation and common effect on the tariffs now overweight the possible slowdown on employment. And that's the major statement that we have. This immediately has made an impact on the market expectation concerning rate cut. So things that investors thought already is their pocket, at least 25% base point cut, currently stands under question. Everybody now is waiting for a Wyoming statement because, in fact, meeting will happen in 2 weeks. Right in the beginning of September, we have the FOMC meeting. And Jerome Powell could bring some clarity on what really will happen in September. So this immediately has boosted the dollar, and you can see what's going on the forex market. Our short-term intraday bullish setups mostly has been erased. They are even has not been formed, so they're not started to act. While on the gold market, we do not have such a reaction. In fact, things that we discussed yesterday, the trading plan we talked about, mostly stands the same. On the daily chart, yes, we've got some minor downside action, but mostly market stands in the same level. On the 4 time frame chart, I still keep this godly steeple pattern for some case because we do not know what will happen with the rate, what the Jerome Powell will tell, and potentially, as we also discussed this yesterday, potentially we can't exclude chance that market could proceed lower and reach the 33 area. But if even this will happen, this will not mean yet that actually the bullish setup on the daily chart and the weekly chart that exists will be destroyed. So until market stands in this range forming the pennant, it keeps chances on the possible testing of the resistance here. Only if we will see the downside breakout here, yes, in this case we have to acknowledge that probably we will get the deep retracement first before any other attempt of the moving higher will happen. But for now, we are focused on the small bullish context that we have, and we need to control it and see early signs as of the proper action based on this setup as the signs of the failure, because both of them might be useful for position taking. So on the 4 time frame chart, everything mostly stands the same. On the hourly charts, take a look at what's going on. In fact, yes, market here was testing the trend line of the wage pattern here. Now it's also stands around 33.25 support area, testing it again. But for now, it still holds kind of the shape of the possible hand shoulders pattern. If it will break it down, start moving back to the 33.11, return it back down here, that will tell you that this scenario is falling apart and market is moving first to the 33 target, and then we will see what will happen next. So it might be treated as inability of the market to show reaction on the support area. Here, inability to start upward action, which obviously will be bearish. And that could change the trading scenario, our trading plan for the next week. If this will be really signs of weakness here, that's probably indeed we could get really big downside retracement. Because in this case, weekly big pattern will be broken down, which will be actually, I think, really epic change in the current picture. So, but let's go step by step, and first let's finish with these potential hand shorts, because for now here hasn't changed anything bad, because after a reversal upward swing, markets as a rule shows the deep retracement. So 618 retracement here is absolutely normal thing. Now we just need to wait for reaction, whether the market will be able to show the normal proper reaction here to the upside. And that currently, as you understand, mostly depends on what Jerome Powell will tell, because now market just waiting for it and see what will happen. So I think that we should follow this and also don't take some really big activity here and just watch for now what will happen. If you have the positions, you probably could keep it with this pattern, just place the stops. Not occasionally we're trying to get the pattern to minimize the potential loss. So and just be patient, see what will happen. If you do not have any positions for now, you could stay aside, because today is already Friday, and actually the coming important event. It's better to not take significant risk and do not take any new positions for now, and see what will happen. So that's probably enough for me. Let's see what we will get on the meeting in Wyoming, and return back to this question in the weekend.